Guys, this is Pedro Raufi from the Gerchik Co and you're watching the market review of this week. Today is Tuesday and we are going to check the situation with the stock market, with the Forex pairs, which are the most important one actually. And of course, at the end of the program, we're going to check the situation on the cryptocurrency market, which is as well uh, kind of important. Nowadays, we have some kind of news background for each of those topics, actually, and we're going to check them one by one, and we are going to check the situation on different sectors, for example, energy sector, commodity sector as well. And that's all when we get to the Forex pairs analysis. We are going to do that. We're going to start the Forex from the stock market, and we're going to actually review some of the news which are related to the stock market straightly, about which we actually kind of told you that this thing is going to happen, this thing is going to start to happen. And we actually told you about the problem with the job market, which is going to be actually a really hot problem and really obvious problem during the second or third quarter of this year, because of which Federal Reserve System won't, for example, hike the interest rate or tighten the monetary policy further. Because nowadays, if you hear different articles from different analysts, most of them actually, even from the biggest banks and analytic banks, telling that the inflation is kind of already exist on the market and it's kind of already peaking, and because of that we cannot say that already this problem is kind of that important as it was, for example, before, and this kind of getting solved by the tightening of the monetary policy with the by the help of Federal Reserve System policy, which is actually a tight policy, which is actually a hard policy. The news is related to the US stocks, which started to go again downward, about which I actually told you that the upward movement which we are now observing, which we actually observed previous week, at the end of the previous week, is kind of a movement that would finish, and actually we are going to go lower a little bit. We are going to break through the local minimums. Maybe we are going to even renew some new minimums of the price on the S&P 500, Dow Jones, and of course the Nasdaq High Tech Index of United States stock market. And this news is related to the Apple reports about slowing the hiring for the company, and spending which is getting decreased because of the economic uncertainty, which is now actually kind of really hot in United States, and the main reason could be the war, the main reason could be the food crisis, the main reason could be the energy crisis, and the future crises which we are going to face. We are now actually don't even talk about new viruses, yes, and new different infections which have been found in Europe, in Africa. This kind of things actually are going to happen as well, as Bill Gates said, as different type of predictors actually told us from a year ago that coronavirus is a start of some era of new viruses and infections which are going to change the world picture, or as we say, the whole picture actually of the world. But that won't be a really bad news for cryptocurrency market. We're going to actually check all of we're going to actually analyze all of this information later. So about this news and the main impact which it had on the stock market, we're going to actually check the situation on the S&P 500 prices, which have gone lower due to the 4 hour chart. Due to the 1 hour chart, you can actually see this downward movement, which is really impulsive. So this movement have been realized because of some uncertainties about the future of the markets, because of some problems that we have nowadays. As we know, the situation with war between Russia and Ukraine is getting harsh, and things like even the frozen war or something like that doesn't help, because we all know that this thing is going to continue, and actually this war is going to shift into a wider war in different places, in different localities, and actually it's going to start not exactly as like a third world war, but this war is going to shift into wider wars which are going to happen. And the only reason that they won't happen, it would be some, I don't know, cataclysm or something like that. And because of these factors now, because of this uncertainty, we have the situation which is kind of making markets to go a little bit nervous. So this situation with the S&P 500, with Dow Jones, with the Nasdaq are going to actually be the same. And the idea haven't changed. So I think the prices are going to go further, fall further, retest 3007, 3600, maybe even go lower. So maybe for now it would be a little bit um, early to tell about this, but we have to wait for the retest of 3800 at first, because impulsively we are going to get to this level, and before and after this kind of impulsive movements, the continuation of the movement is really under the question. So we cannot say that this movement is going to continue during the near hours, or maybe during the nearest sessions, but we can say that this movement is going to continue the midterm. But for maybe some hours, some sessions, we're going to observe for example, some correctional upward movement on 1 hour or maybe 30 minutes charts of S&P 500. We're going to go with Dow Jones. Dow Jones as well. It's kind of have been fulfilled this downward impulse, and we have a chance of the retest of 30,500, for example, which is actually a very important level. But in the nearest future, I think that we are not going to get under this level, under 30,500, but actually we are going to retest 30,500 anyway in the future. So this is the level about which we have to think. And maybe after the test of this level, we're going to kind of, for example, get into some consolidation, like here, for example, or like here. And after that, we're going to reverse and go higher. But mainly, the continuation of the downward movement, of the sharp downward movement of the stock market indexes, is a factor that actually going to happen, at least speculatively, before prices start to rise again. And as you know, the only reason why prices would rise is, for example, the cryptocurrency rising is, for example, the some frozen some frozen in a war situation, for example, which could actually happen during next months, and the Federal Reserve System monetary policy tightening, which have to actually stop already because of the situation within the job market. So we have three reasons why actually stock market have to start to rise in the near future. But before it happens, anyway, prices are going to speculatively break through local minimums. They're going to break through local minimums of, for example, S&P 500 is going to actually break through local minimum of 3,600. It's going to happen. It's going to actually maybe go lower to 3,400, 200. I don't know, but this could happen before we get into the main upward phase, which would continue for some, for example, months. And as well, Dow Jones could actually break through $30,000, $29,000, or maybe even lower. About the Nasdaq, bad news is that Nasdaq is the high tech index, and problems with these companies, high tech companies like Apple, like Tesla, which have been actually really famous during last months, because both of these companies having problem with hiring. They don't hire that much. They're stopping the hiring process, and that's actually a problem which job market statistics are going to actually show us within some month or two anyway. And as this information come out, as this information comes out in future, Federal system would start to say, for example, that it's going to halt the program of tightening the monetary policy. That's a fact. But for now, Nasdaq has a potential. Previously, impulsiveness of downward movement is not really a good factor of the continuation of downward movement. But anyway, we are going to stick with the idea of the continuation of downward movement in the midterm. But in short term, we could have some stop in downward movement within some days, maybe within some sessions. We're going to continue it to 11,500, maybe 11,400 as well. So next comes the DXY, and we are going to get through the dollar prices, Forex pairs, most famous Forex pairs, and we are going to check the energy sector assets and the commodity as well, like gold, silver, platinum, and palladium prices as well. But before we get through all of this, let's see what is going on the economy calendar, so we would know what, for example, kind of currencies during this week could have a higher volatility, for example. Today we are going to have some releases from Britain, which are not really good. And CPI from Europe is not kind of changing as well. Actually, the predictions are telling us that it would change, but as you know, European currency is not getting um, strengthened in the near future. It's just going to consolidate a little bit, maybe even speculatively fall. Building pyramids of the United States, which are going to fall as well. That's not a good sign for dollar prices. So maybe for today we could give priority to buying positions for euro and pound, maybe. But for tomorrow, let's see what we're going to have. 6 o'clock CPI of United Kingdom. Smooth, really mild rising of this statistic. And at 12:30 by GMT, by Greenwich time, core PMI, core CPI, Consumer Price Index of the Canada, without any predictions. Don't forget that the only thing that has a really great impact on the Canadian dollar is the oil prices jumping or falling. As you know, we had some news about Russia, that the oil of Russia is kind of under a real huge embargo, and this is not going to get sold to, for example, European countries, which would lower the demand of the oil. And we know that, for example, India and China, for example, they kind of cut it about 30% of the import of Russian oil, because they just cannot buy that much. They don't need it. And this will actually make the demand of oil to get lower. But as you know, mainly the countries that are using the most, the biggest volume of Russian oil hasn't yet cancelled or hasn't yet put any ban on the Russian oil. And because of this factor, the prices of the oil are not really going to fall that much, as I told you from previous times, maybe from previous weeks, if you remember, that anything would happen, something like that, for example, to just make the demand to go lower. For example, President Biden is going to try to do anything to push higher the producing of oil, for example, companies, to just push up the producing volumes, which could help, for example, the energy crisis. But as we know, the most important thing here about the energy crisis is the gas deficit, not the oil deficit. And oil, and even despite all of these factors, oil prices are not going to fall that much. So Canadian dollar, I don't think that's going to be that weak. Existing home sales from the United States at 2 o'clock tomorrow by GMT, which are going to be as well not so good. Crude oil inventories, let's say, we are going to have a lower producing as well from the United States, and this kind of statistic continue to come up. For example, not previous week, but the previous week before the last week, they had the same situation with a high deficit from United States, which is actually telling that it's, you know, producing, maybe trying to make a higher producing of oil, but actually it's not, as you see. So what's going on Thursday? We saw the Wednesday, and I was going to check Thursday. Japanese bank. I don't think that in Japan and the policy of Japanese bank is going to change in the near future. Deposit facility rate of euro. Yes, they would kind of change the rates, but that's not going to change the situation with euro. European interest rate. Initial jobless claims from United States, and as we see, continuation of the downward trend. That's good, but this trend is going to change in the near future. So the oil prices for now are not going to be that weak, and we're going to actually check the oil prices because I don't believe in the harsh downwards movement of the oil prices in the near future. Philadelphia Federal Bank Manufacturing Index, which deficit of which is getting lower. That's a good news actually. And Friday, the last day of this week, at 6 o'clock, retail sales from Britain. The reducing of the deficit is actually good news. German manufacturing PMI, which is falling, not so good. From Britain, no predictions, and interest rates of Russia. We're gonna cut it. It's not gonna help them. Yeah, ruble is so powerful, but they've done it. You know how they've done it just to show how powerful the currency is, but people actually are going to starve in the near future in Russia. So that was the economic calendar for this week, and we're going to check the situation on the Forex market. So we're going to start from DXY, and let's see what's going on the 4 hour chart. As you see, and as I told you from maybe previous month, when I saw this kind of movements, this kind of formations of gaps, the space which have been made during the weekends. this kind of space between candles called gap. That's the distance between the closure of the Friday and the start of the Monday market. And I told you that here the situation is the next. Regulator is not interested, uh, so all of the market would make money from the movements nowadays because they are controlling all of this um, artificial movement of the prices. S&P 500 has an artificial movement of the prices. That's a factor. Gold prices as well. All of it, it's artificial movement because they control it. That's not Bitcoin. That's not, gold. These movements are really artificial. The United States dollar and the S&P 500, the United stock market, both of these are controlling artificially by the government, and these gaps are showing us that the regulator is really not interested for the market to make money on this speculations, and it doesn't need the speculations of the markets. To see the movement better, let's get to the 1 hour chart, and so that's why I told you that even if this movement would continue, this won't be the movement that you would use it for example, trading, because it's going to happen during the weekend. It's going to jump during the weekend again, and it actually closed above it, closed above the potential of the breakthrough here, the dollar prices, the dollar index price. Here is actually a mirror level, so I don't believe that prices of dollar in the near future are going to continue to fall. They're going to consolidate and then rise again. Now we're around 100, 107 and 50, 107. So before we get under these levels, before we get under this range, we are not going to fall further. And I think that we are not going to get under this range. We are not going to stuck under this range. We're going to actually just continue the consolidation and then get above these levels and just continue to rise further. This upward movement actually could be really mild and really, really moderate. So on the charts of euro, pound, Australian dollar, or New Zealand dollar, the continuation of the downward movement would be really, really slow as well. Would it help you in intraday, for example, tradings? There would be some movements, but be really careful because speculations is the main thing nowadays on the markets. Let's get through all the spectrum of the Forex market. So we are going to start from the European currency. Euro nowadays costs about 1.015. Not such a good news, but it's trying to reverse. As we know, euro had been in a parity with dollar. The prices have been actually get equal during previous week, and this was a psychological level of $1 or €1. And before that, after that, the main thing that is going on is a consolidation and a reversal at least. But unfortunately, this reversal movement, this return, was really impulsive. So the main thing that I can say that euro is not going to strengthen further. Euro is going to fall further. But before it fall that much, or before it fall lower than local minimums of today, local minimums, it's going to make some consolidational movement between 1.020 and 0.99, for example, 99.20. As you see here, we had a convergence before prices start to rise further. So actually, we talked about this convergence between the RSI line and the minimums of the week before we get to this week. Actually, remind you that this would be a reversal here because of the convergence. British pound to United States dollar. Here we had the same convergence and the reversal, but as we see here, the pound price is now retested the mirror level, but it's not getting strengthened above this level. So 1.20 is the main psychological level above which we need to strengthen. If we won't get strengthened above this level, this would mean the prices are going to continue to fall further. So if we retest this level with a really high impulse, with really big impulsive candle, I mean a long candle, if we close under this level on the 4-hour chart or on the daily chart, if we get a really low amplitude after get above it, for example, low amplitude of the candle, or a consolidational movement, or any kind of, for example, upward wedges or upward channels on the 1-hour chart or 30-minute chart, which would mean that prices are actually going to reverse. So those are the reversal patterns. This would be a really good signal for the next reversal. Mostly, mainly, if we are going to even rise further, so there would be some signals of the reversal, and those which I just numbered are the reversal signals about on which you have to actually pay attention. So if you find them you could know, and you would know that prices are going to reverse the nearest future. Australian dollar to United States dollar as well. Here we have a mirror level which is getting retested. Impulsive retest of this mirror level. This is not a really good news. Let's see what is going on the daily chart. We had a divergence, it ended, prices reversed. I think that this divergence is continuing, even if we get above this local maximum. Because of the impulsiveness of the price, we are continuing to fall further, and we will continue to fall further. So just wait for Australian dollar, it would start to fall again. New Zealand dollar to United States dollar. What's going on in 4-hour chart? The same picture. The retest of a mirror level, consolidation is actually on, and the impulsiveness of the previous movement to the local maximum is already a signal of the next reversal. So you have to just be ready for this reversal and the continuation of downward movement. Let's get into the energy sector. Let's check the prices of oil and gas. So then we would get through the commodity prices as well, the oil, the gold and silver price. $100 have been retested. As we told you, prices of oil are going to make some correctional move. Prices of oil are under a high pressure of the lowering demand of Russian exports. But as you know, this situation will change. The only thing that could actually make oil in the future to fall that much or fall wildly, as we, for example, think or say, is the lockdowns, the continuation of some infection, some maybe new infection. That's actually really obvious, and this could happen, but I don't think that during this year. So you have to actually pay attention that oil prices and the demand on oil is not something that would disappear that soon. And the oil prices are going to just consolidate maybe in the near future. So we have retested the $100 impulsively. And the next movement is a consolidation, is a lowering of the amplitude. That's not a really good situation for buyers. But here we would have some speculative movements, upward speculative movements. I think that here most of the traders have to get ready for some reversal, which would happen. And this would be a reversal from the local maximum from 100, 102, or 104, for example. So next comes natural gas. And as we told you from previous time, natural gas is going to continue to rise further. And it's going to continue to rise and even actually going to rise further than the local maximums. Winter is coming. Don't forget about it. When winter comes, this would be really good for gas prices and Bitcoin prices. So both of them are actually ready for next uprising, for next upward movements. Gas prices have been already rise from previous time, impressively, and they are now retesting the middle of the previous uh, impulse. So this middle range of the previous impulse is the golden range of the Fibonacci, which is a really important range. And we have to wait for the retest of this range. So it's about starting from 750 and end about 8 or maybe 770. So 750, 770, this would be a range after the retest of which we could say that prices are going to rise further or not. I think that they're just going to consolidate a little bit in the near future, or maybe fall to 7, for example, or maybe even 650. But I don't think the prices are going to stop under 650, so they're going to actually rise. They're just going to finish the correctional downward movement after the retest of $7 or $6.50. And after the retest of those levels, prices are going to return to the upward phase and just continue to rise further. United States dollar to Canadian dollar, which is kind of related to the oil prices. That's because Canadian dollar rise when oil rises and United States dollar rise when oil falls. And because of that, United States dollar to Canadian dollar make a really great opposite correlation with oil prices. So oil prices, after the fall of the oil prices, we had some movement of oil which was a little bit upward. And this is the thing that we actually see, the upward movement of oil, previous upward movement of oil till the level 100. Next, I told you that prices actually are going to continue the consolidational movement. So I think here we are not waiting for any kind of the continuation of, for example, that much of upward movement. But this would happen. For example, this would actually start from now, from today. From next sessions, this upward movement of this pair could continue because oil is going to, for example, a little bit corrected downward and then get stuck inside the corridor and just continue to consolidate. So the situation here would be the same. 1.3050, 1.31 could get retested in the near future, but I think the prices also are going to reverse from those levels as well in the near future. So the main thing that is going to go on this chart is the continuation of the consolidational movement between the levels 1.2950 or 1.30, which is a psychological level, and 1.3050 or 1.3040. So this would be a range inside which prices actually are going to consolidate in the near future because oil prices are going to consolidate, but inside the upward channel, inside the really long-term upward channel. And dollar prices, United States dollar prices, are actually getting ready for the next upward movement as well. So here we're going to observe a consolidation mostly. United States dollar to Mexican peso would be the same situation with the United States dollar to Canadian dollar actually. So here we have a chance of the continuation of consolidational movement as well. Downward movement was really impulsive, so we cannot say that this movement is going to continue in the midterm. $20.40, $20.20 would be the range before the retest of which we cannot say that prices are going to rise. So we just wait for the retest of this range. Prices are going to retest this range, mostly with some speculative downward candles, which are long, which would close above 2020, and then they're going to continue to rise or close mostly above 2040, which would be a really great signal for the continuation of upward movement. Actually, we have this closure for now, but the amplitude is really low. So maybe if you already have opened the upward, opened the long positions, this would be a good idea to not to close them, because here and now oil is kind of getting ready for some downward movement. But there would be speculation for oil. Oil could make some downward speculations. But mostly, this situation would help you to maybe to continue the long positions of this pair between 2040 and 2060, or maybe 2040, 2080, somewhere like that. And you're getting to check the situation on the commodity markets. So we are going to start from gold prices. Gold prices haven't changed from previous time. They just stopped to fall further. I actually told you that gold prices could stop to fall further because of some uh, historical levels. If I remember, yes, it was actually the historical levels of 1000, for example, 700, 1680, which haven't yet retested actually. But I told you that when prices get near to this kind of historical levels and prices are kind of sharply rising or falling through these levels, for example, we would need some news to just make markets to remember, oh yeah, now it's the time for a stop. Mostly this happened with different type of assets. Then technically we are getting near to the moment of a reversal or just a correctional movement, and we see that prices are kind of showing us that they are maybe even going to get through those levels as well, despite the impulsiveness, for example, of the movement. But actually, in this kind of movements, uh, some fundamental factors start to appear, because of which technical factor start to play again and start to be mentioned by the markets. 1680, 1700, it would still be my idea of the retest for the gold. And I think that the gold is not going to get under these levels for a long time. So maybe you're going to speculatively retest those levels. But I don't believe that prices are going to get lower than these levels. I think the prices for some time would remain above these levels, would consolidate, maybe start to rise to 1760, 1780, but then they're going to just start to maybe make some downward channels, mild downward channels, or downward wedges. So the next asset is silver. And the situation with silver have to be the same, but it's not. Due to the daily chart, it's not. But maybe due to the weekly chart, we have some main levels. Yes, we have the mirror level from previous time. Actually, we told you that there is a mirror level which have already get retested by silver. And actually, if we think about silver, silver really doesn't have the potential of the downward movement now, because the level of $18 is a really important level which have been retested different times during the history from 2040, as chart is showing me, maybe even the history kind of longer than I see. So this level is really important, $18. And silver is already retesting it, and silver have been already stopped above this level. So, can I say that prices are going to fall further? No, of course I cannot say. They could speculatively do that, but I won't open any shorts, any more short positions for silver in the near future. Next comes the platinum. And the situation with the platinum here from the previous time was actually predictable because we retested the local minimum, we retested it with in the form of a head and shoulder reversal pattern, which we can see here. And that's actually the convergence pattern, as you see, between local minimums of the week and the line of RSI oscillator. In other way, that's actually a pattern of reversal because that's a pattern of the volatility widening, which is another signal of the reversal of the trend or tendency. So the rising was so impulsive as well. I cannot say the prices are going to rise that much in the near future, but mainly they would stop to fall that much. I think that due to the 4 hour chart, we have some chances for some downward speculations in the near future, but mostly we are going to continue to consolidate between 880, 840, or maybe 880, 820. So let let us say 880 and 820 are the levels between which we are going to consolidate in the near future. I think that 840 would be the last border for sellers, for bears in the near future. And the palladium prices, which is a sanctional asset, haven't get lower than historical minimums or even local minimums. The only reason is that this is the sanctional um, asset. And we had actually some news about the Russian gold ban, the Russian gold export ban, which kind of have to, for example, um, put a pressure on the demand of gold or something like that, especially when China is not interested to, for example, buy from Russia because China is one of the exporters of gold as well. This could, for example, not really help gold, but palladium is a really needed material for semiconductor industry, and it's under really harsh sanctions from Western countries, as steel, as coal. So the prices of this kind of assets are not going to fall in that way, and they're not going to break through some borders which are already showing us the last potential of the prices or the last borders of the price action. Due to this, I told you from previous times that 1800 is the last border and it won't get even maybe retested. We haven't yet retested it and we actually reversed from it. But we have to just be really careful. Prices are going to rise further. But 1800 is the last border for sellers if you are going to sell due to some, for example, news or speculative uh, interests. Next come the United States dollar and JPY, and of course CHF, the Japanese yen, and the Swiss franc, currencies which are related to the commodity prices because they are as well the risk assets which rise in price when something go wrong with the stock market, for example. Because as you know, commodity prices or risk assets or risk currencies work like that. And Japanese yen and Swiss franc as well are the risk assets. Japanese yen is really weak previously because of some politics of the central bank about which we talk too much from previous months and before the war started, for example, before that 3 months, maybe before that. So I think that for a whole last year I'm telling about the Japanese yen weakness which is not going to change even now, because some statistics showed that for Japanese economy is not really good to keep the yen, keep the national currency that weak. This won't work already. And actually, the main reason why it works because of the exports, and as you know, how lower the currency or how weaker the currency, the main currency of national currency is, it would help actually exports, and the exports would help the GDP, the gross domestic products of Japan, because exports are the really high amount, include the really high amount of the value of the GDP of Japan. 140, which was psychological level, have been retested, and the downward uh, reversal which we had after that is really funny. It's really mild. It's really um, unreal, and mostly I don't think that it's even going to continue. So 138, 135, I don't know what to say. Maybe 130, I'm sorry, 137.50, 137 are the levels which maximum could get retested. And mostly prices are going to continue to rise and maybe even break through 140 again and retest it. So let's say that 137, 137.50 would get retested in the near future as speculation, for example. But mostly we have to get ready for the next upward movement, which is going to continue further. United States dollar to Swiss franc. Swiss franc is of course more powerful, so it could make dollar to kind of stop rising. And here we have the situation of the divergence. We had it. It caused the next movement, consolidational movement. And here, for now, I don't believe in the continuation of upward movement for this pair, for example. 0.98 could get retested speculatively, but I think that in the near future, we're going to face a really sharp and speculative downward movement. So we just need to wait for it. And of course, if we get this kind of speculation, we would get it on the United States dollar to JPY as well, but it won't be that sharp. It would be, for example, I don't know, 4 times less than on this chart. Actually, 5 times less than on the chart of United States dollar to CHF to Swiss franc. And we're going to get to the cryptocurrency market. Cryptocurrency market previously made some optimistical movements, and we actually told you that prices are going to test 25,000, 27,000. They could rise to $25,000, $27,000. Now, $23,000 actually have been retested. 23,000, not 25, but 23,000 have been retested. So from previous time, we gave it 23, 25. 23 have been retested, prices reversed. But I think the 25 as well could get retested. But all of this is speculation. The straight correlation which cryptocurrency market has with the stock market in the States haven't yet disappeared. And because of that, because we are waiting for the stock market downward movement in the near future, we cannot say that that the cryptocurrency market is going to rise. Regulations on the cryptocurrency market is going to make him suffer during this year. But as we get near to next year, to the winter, the situation would be better. The situation would get better. So maybe for the holders of Bitcoin or Ethereum, this would be the better time from the next year, from the New Year's Eve, to start to hold it, because as we know, the energy crisis is going to be really harsh. Because of that, the prices on electricity is going to get higher. Prices on Bitcoin is going to get higher. Previously, we had really bad news, for example, from Russia even, which actually got a really high amount a big amount of transactions, cryptocurrency transactions, and miners that they just took and just put a ban again on the cryptocurrency transactions because they are not interested different things because that's authority which is trying to fight with freedom of speech and the other things, and because of that they're not really pro cryptocurrency for now. Maybe they would return to this question during some years, during some months, some seasons, let's say. So that's the situation which we have for now for Bitcoin. And Ethereum prices, they had retested 1,600, 1,400, 600 have been retested. Next levels are not going to be 108, 1,800, they're going to be less. So just wait for the next downward reversal. I think that the next the next level for Bitcoin and for Ethereum is the continuation of downward movement. Unfortunately, but it would be the continuation of downward movement. Thank you guys that you watched this video. Don't forget to subscribe on the channel and ring the bell so you won't miss the future programs. And don't forget to check our official website of Gerchik.com. On this website, you can actually find different tools and courses for traders. We have already packages for you for learning and for using the different instruments, instruments for your terminals, and different programs, different courses for beginners and experts. I mean traders, with a great sell-offs. So just check this information on the main website of the Gerchik Co .com. And till next time, take care of yourself and have a good tradings. Bye bye.